Everywhere you look today, it's up, up, up. The first thing I want to talk about is inflation up. If you've been following this channel for a while, you know that this is absolutely the case. The second thing is coal up. It turns out that the demand is so high for coal right now that inventories are running out. And the third thing is crypto up. While this is all up, we need to ask the question, what happens as it falls down? Let's begin. Here you can see the US national rent year over year versus the CPI owner's equivalent rent year over year. That's a 4-month lead, suggesting at this time that we will see some serious inflation according to this particular metric. It doesn't necessarily tell you all the story, but when you see everything connected to real estate, it's up. Take a look. This is Goldman Sachs. We expect the core PCE, the actual rate that the Federal Reserve loves to use, personal consumption expenditure, to remain above 3% and core CPI above 4% when the taper concludes. We are talking right now about a tapering of the purchases of the Federal Reserve and what they're doing with the treasuries, the mortgage-backed securities. So they are suggesting to us, Goldman Sachs that is, that at this time we are seeing some serious inflation, and even when they conclude their taper, it's still going to be a problem. We expect the Fed to start the tapering process in mid-November and end in mid-June 2022. Now, I wanted to show you this really quickly here. November 2021 has been what they have suggested, and that is basically every single major US bank today. $15 billion. Why? Well, while some of the banks actually predicted a rate of $15 billion, the Federal Reserve minutes actually talked about 15 billion as well. So here it is, June timeframe comes along, 2022, the FOMC meeting, they're going to suggest it is complete and now we move on. But in this period of time of 2022, we are going to see rate increases. That's what they're suggesting, and why? It's only one big thing, and it starts with the letter I, inflation, because inflation is up. Now, this article here out of MarketWatch gets into a lot of detail, but there's just one point that I wanted to highlight. We continue to worry about elevated inflation. If it continues to be that way, then the Fed might have to hike more aggressively to help pull back inflation. So many people on the previous chart would have thought they're just not going to do it. They're just not going to taper. Second, they're not going to increase interest rates. But remember what they say here. If inflation gets too high, there's only one thing to bring it down, and that is interest rates. Interest rates can be used to put this down. So I think that is very important to understand. 3 days will reveal global alert level on inflation. Many central banks are going to have meetings in this week. By the time you're watching this video, it is Monday's trading session, and starting Tuesday, and then we go into the next couple days, we are going to see meeting after meeting after meeting of central banks around the world dictating what the policy will be over the next little while. And most importantly, the Federal Reserve might have a few things you might want to know. So stay tuned to this channel, give it a thumbs up, because that's going to make it more likely they will end up in your feed, and then you're going to get to hear directly immediately after the Federal Reserve mentions what they are going to do. I will bring that to you. Now, you're looking right here at the euro area, inflation accelerating to 4.1% in October. This is an area that has been dealing with nothing but deflation, bringing interest rates into the negative, and even by their own metrics, suggesting 4.1%. I'm sure it is much higher for many people, but All we need to know is that they are doing this. In this particular article, it is simply just talking about what they're planning on doing. You get Australia, my friends in Australia, you are going to see some information this week. We don't know what's going to happen when it comes out. Obviously, I'm going to bring it to you. There's the Federal Reserve. They talk about Japan. They talk about other countries in here. All we need to know is that there's inflation in most countries. Most of the developed world is experiencing inflation like they haven't in a very long time. Many worry that this is like the 1970s, but I think it's a lot different than the 1970s, although it does have similar elements. And why? What we see today is maximal debt. We've never seen this before. The most amount of money printing ever been done, and deficit and debt all basically accelerating to a rate at which is historic. At the same time, the world is very different than 1970s. They are very, very connected. A problem in one country becomes a problem in another, and that is never a good thing. It's great when things are working smoothly, sure, but when you have problems, it becomes a real problem. Let's break it down here in the Money GPS Insights. Central banks are beginning to tighten, and that is putting pressure on risk assets. So keep an eye on that if you are overexposed, if you're overleveraged. Money may rotate within institutions, so you better watch out. If they are suggesting that this particular sector is a little too hot, money is going to start to move out. Invest with the trend, but not with the hype. Don't get onto the latest craze. Understand what's happening, look at the trends, and invest accordingly. This tells you how intense the problem is today. US coal miners are sold out for 2022. All through next year, US coal miners, they don't have stock. We only have a small portion left to be sold. Arch locked in 2022 pricing 20% higher than the spot market. They could sell it for whatever they want. Almost every lump of coal that the US miners will dig out of the ground next year has already been sold. Think about that. We're going to do something next year. Pay us 20% more than the spot price now. You're going to get it. Of course, they're going to take it. If they're expecting this to double, triple, quadruple, who knows? Well, we can sell it right now and people are buying it. That is for sure. Peabody Energy Corp, the top American supplier, has contracts for more than 90% of its coal. Taking a look at this, you can see demand for electricity is surging as the global economy recovers and winter approaches, driving natural gas prices to record highs. Even with coal miners boosting output, power producers are signaling multi-year contracts for every ton that they can get, as global leaders are converging to determine what will happen. And yet, coal, something that was supposed to be part of history, is surging. The demand and the usage. Take a look. Lower 48 US mean temps. It's going to go down, down, down from this point on. Depends where we are. If you are in Florida, certainly could be a lot warmer than in the Northwest. We'll see what happens. But ultimately, we're heading into the period where, guess what? A lot of demand is coming up, and they're going to have to go, who knows where? Is it natural gas? If coal's all sold out, what are they going to do? Coal piles at a 24-year low at U.S. utilities on demand surge. Miners can't keep up with the world's voracious appetite for coal. Record natural gas prices pushing power plants to switch fuel. What do? Supply and demand. You have a lot of requests. You got to deal with things. You do what you got to do, right? Shrinking stockpiles, coal inventories are plunging at U.S. power plants. And it's always going to be up and down. But I mean, this has been the trend over this year, this period. The ability for the producers to respond is not what the utilities thought it was. It just doesn't exist. And think about that. You're not seeing this for one commodity. You're seeing it all over the board. right across the board. Coal stocks for our customers are at critically low levels. There's all kinds of news like this. Stockpiles are coming down very rapidly. We need to look at what's underlying all of this. Yes, there's an energy problem. There's a supply chain problem. There's all kinds of problems. There's no doubt. There's always problems. Next year, there's going to be problems. 5 years from now, there's going to be problems. But what's underlying all of this? And nobody wants to touch it. And that's why I put it at the front of this video, is that the central banks have brought interest rates down to zero. They've pumped in trillions and trillions and trillions of dollars. And now we are stuck dealing with some very serious issues. Remember what's underlying all of it. Russian natural gas supplies to Europe. There's a lot going on here, and sometimes I don't mention a certain point, and I see some people that get aggravated and so on. There's more than two things going on with this particular situation. Russia seems like they want to deliver their gas through the Nord Stream 2. Hey, let's open the taps. Let's go. Let's go. But Europe is saying, no, not quite yet. At the same time, there are other pipelines that are going to Europe. Okay, this is just yet another pipeline. And this is just showing you that it has declined to a level we haven't seen since July. And the chart goes back all the way through 2020. And, we haven't seen it this low for a while. So I'm interested to see how this develops, needless to say. But that just means the potential for higher natural gas prices in Europe is certainly on the table. ASIC has given Bitcoin ETFs a tentative green light, opening the door for them to be traded on Australian exchanges. My friends in Australia, you will be joining Canada, also having the ETFs of Bitcoin. What does this do? It opens the market of Bitcoin to people who probably wouldn't traditionally be investing in Bitcoin. So you might have an institution, or you might have an individual that, they call up their financial advisor and say, I want Bitcoin. They don't know how to do that, but they can now invest in an ETF. So they could say, you know what, put 1% of my money in Bitcoin. And that could be something that people start to do regularly. Oh, I want 1% in. I want 1% in. And we'll see what happens. It's certainly opening up. The government wants to tax it. It's going to be a lot easier for them to tax if it's through an ETF and not actually owning it. And then I thought this was amazing. Let me know what you think in the comments about this one. And by the way, about the previous one with the Bitcoin, do you support the ETFs? Do you think this is good? Does it have any advantage at all? Let me know. Zillow has listed a staggering 93% of the hundreds of Phoenix homes it owns at a loss. So what they were doing is going into the market, buying up these homes, fix and flip, maybe just a paint job or maybe nothing at all, and then sell them back on the market. Phoenix, as I showed you maybe a couple videos ago, the market was up over 30% year over year. And yet they're selling basically all of them at a loss. This is very strange. I don't know what's wrong with their algorithm, but something's wrong. When you have a market that's increasing 30% and you're basically losing everything, strange. If you are in Phoenix, if you know what's happening, if you've seen some of these examples, let me know in the comments. In fact, let everybody know in the comment section below. Let's talk about this. Is Zillow buying homes in your area? Put it down below, please. We need to find out what this is all about. Why is this big company? And by the way, they halted. They said, oh, we're halting, we just need to stop right now. We got a backlog. But I think there's something else going on here. Let me know what you think. If you want to support the channel, just hit that thumbs up button. I do appreciate it very much. When you do so, like I said, it comes up in your feed more likely. So I want to thank you for that. And if you haven't seen this video, you definitely want to check it out. So click it and I'll see you there.